What's up, guys? Good morning. Welcome. Today is Friday the 3rd, 2025. This is the morning market reports. And man, I just wanted to basically do this video and kind of share a couple of things with you guys on what's cooking in the market, what we can kind of expect today. So, all right, so check it. Yesterday was the first trading day of 2025. And basically everybody's been asking, where's the market going? You know, where's this market going to go? I want to keep it real with you guys. No crystal ball in my pocket. I've been dancing with these markets for 20, 25 years now. And there's only one truth that stays solid. All right. Nobody, not even the so-called market sages, nobody knows where the market is going, guys. Nobody knows moves ahead. Okay. That's the facts. Everybody trying to be a market sage. Every year, it's the same song. It's the same dance. Talking heads drop predictions, trying to get people to kind of like to corral people into different sectors and try to kind of push money in there, and dropping predictions. You know, this is going to lead, that's going to lag. But the truth is that we don't know which stocks are going to stand tall and which ones are going to crumble. Okay, the future is a mystery. All right. And trying to live up to that, trying to live in the future, you're gonna miss the beauty of right now. Okay, that's the game. Play in the present, not in the what ifs. So that's the first thing I want to say this morning. Be careful with that, especially as you kind of go into the weekend. You're gonna, the Wall Street Journal is gonna put out a lot of articles, I'm sure, and you're gonna hear a lot of these people talking about what to look at this year, what's gonna work, what's gonna pop off. Nobody knows, guys. Okay, just focus on what's going on right now, and I'm going to get into that in this video on what is actually going on right now in the market. So enough preaching. But yesterday the market was mad. I mean, it had that wild swing vibes going. Okay, the Dow started off on a what the heck's going on? All right, sorry about that, guys. So look, yesterday the market was mad. It was just swinging all over the place. The Dow started off, opened up on a high note. It was up almost 400 points at one point, and then boom, it's like the tide just shifted and came in. The Dow dropped deep. I mean, you're talking about down like 400 points, actually 400 points, more like it. And the Dow yesterday ended up finishing up down 151. All right, finished down 151, not up. So what sparked all this? What happened? The big apple fell out of the tree, guys. Apple was down like 7 points deep. A downgrade on the iPhone sales hit the streets. Okay, and December looks. It sounds like December was not a good month for Apple. And the thing is December ain't just. That's not just any month, okay, especially for retails. December is like the Super Bowl, okay? That is when you make your money. So Apple not making a lot of money, is getting poor sales in December. That's what the street was talking about. That was an Apple fumble, and it rippled into the market. That move rippled into the market, and there was a lot of stuff that was basically just turned. Like I said, Nasdaq started up, it was riding up in the green, and it ended down 30 points. Nasdaq 100, that ticked down 36. The S&P slid by 13. There was a lot of red ink that happened yesterday, and some of it stood out, like oil. Okay, oil, which oil's been grinding. All right, it had a really heavy hit, but seems to be like it's leveling off, and you're starting to see oil starting to come back up. So it wasn't a bull run, but definitely looked like another recovery day for oil. It was not getting slapped around like the rest of the market. Gold was the same story. It wasn't getting slapped around, moving up. The gold players are just starting to climb out, and the gold miners they're also starting to climb out of the lows. But here's the thing. The market has been under a lot of pressure. There's been a lot of heat. You have a lot of stocks that have been breaking support, okay, breaking moving averages. And when that happens, this is something that you need to look at, okay? Because this is speaking volumes, but there's also something that speaks even louder when this happens, and that's the stocks that are standing firm while everything else is free falling and buckling and falling apart. And that's where I want to keep my eyes, okay? So this morning, what I'm looking at is the stocks that were flexing strength yesterday. Okay, I'm talking about the 21-day moving average champs, the 50-day moving average champs, the stocks that are holding on to their moving averages. And when you have a day where everything's falling apart, what you respect are the stocks that are not going with the crowd. You respect those stocks that are holding on. So some of the things that's catching my eye right now, just to do a couple of name drops, Broadcom, that's looking like a powerhouse. That's holding on good. Reddit is making noise. Astera Labs, A-Lab, solid. Taiwan Semiconductor, IBKR, Interactive Brokers. All of these stocks are standing their financial ground. That's just a slice of the list. So what am I doing? I am charting these. I'm adding these to my list. I'm charting them. I'm watching them. I'm observing them in real time, seeing how they trade, watching them trade in a range, and making sure that they continue to stay range bound. Okay, the longer that they simmer, okay, quote unquote, that they simmer, the longer that they're cooking, the longer that they're in that range and they're trading in that range, the longer that it stretches out, the bigger the breakout. Okay, so let me be real with you guys. Okay, there hasn't been much breaking out these days. It's been a waiting game. But again, the longer that these stocks are holding steady and trading in that range, the better. Okay, you just kind of wait and watch until finally they bust through the highs and they get traction and start that trend again. Okay, now onto the global economics chapter. This is something that I wanted to talk about. Shout out to Argentina. All right, they are changing the tempo. You have this dude Javier Milei. They call this guy all sorts of names on the media, and you know how the media is, guys. I mean, they're trying to create these narratives, but they were calling this guy a Looney Tune, saying this man is an extreme nut and he just doesn't know what he's doing. He's going to destroy Argentina. But he gets in, the man comes in, he cuts taxes, he slashes regulations, he guts out large sectors of the government. And next thing you know, inflation drops just like that. Okay. The treasury is stacking dollars just like that. The economy leveling up just like that. Meanwhile, you got China on the other side, which is playing the puppet master. They're meddling with the markets, trying to get something to work, and just interfering, just not letting a free market be the free market. Kind of like the story here. We just don't let a free market be the free market. So that is different. That's going to be the story this year. That's what I'm kind of looking at. What's going to go on with Argentina, because their economy is gleaming. They got the right guy in there. Again, shout out to Javier Milei. This dude is just a free market guy, and they're doing pretty good. But back on the grind, okay, back to here, back to the US, to the indices, okay? I want to say something, guys. If the markets keep posting negative ratios, okay, we're talking 3-to-1 decliners, more stocks are going to crumble if you continue to see that happen, okay? But certain plays are worth watching when you have that, okay? And I want to mention Spotify. This is a name that's holding that 50-day moving average. So you're going to continue to see the market crumble if, again, we get 3-to-1 decliners or worse. But you want to keep an eye on the things like Spotify holding the 50-day moving average. Meta, right? Meta was up 2% yesterday, holding steady, holding that institutional support. So, I mean, it's nothing exciting, but again, if the market is crumbling and these are not, that is where your strength is, okay? So on the flip side, where the weakness is hotels, airlines. They're just falling, breaking stride, breaking moving averages. You have some of the defense stocks that are also turning soft. My advice, guys, avoid those, okay? Anything that's trading below the 50-day moving average, those are stocks that are trading on thin ice. They're just not safe. Okay. Industrials, mid caps, metals, semiconductors, transports, all of these stocks, they have no bounce right now. There's just no bounce going on, and they are weak links, is what I call them, weak links. Now if oil continues to climb, this is going to be another interesting story. What is it going to do to these stocks that are already breaking down? What is it going to do if oil starts moving up? Okay, so that's another thing to look at, especially when you look at like transport stocks. Okay, how is rising oil going to affect them? Because it is going to affect them. So it's going to be interesting. All right. Now remember, keep in mind. Okay, the 10 stocks hold 55% of the Nasdaq 100. So this is a top heavy structure. All right. And the market is leaning on these names very hard every single day. They're still trading below the S&P is still trading below the 50-day moving average. It's struggling to keep decent levels. So what we have right now is a very narrow market. End of story. Okay. So what I'm going into today, what you guys should be all watching for is you want to watch for strength, avoid weakness. Stocks that respect their support levels, they're the keepers. Anything already beneath the 50-day moving average, those are the throwaways. Don't swim in troubled waters unless you're an experienced trader. And also, there's one thing that I want to talk about. A lot of these new drone stocks, you have quantum computing stocks, a lot of the popular tech stocks that are basically penny stocks or trading, 30 cents, under $1, under $5. Man, keep an eye out. Okay. I must have seen like maybe 25 or 30 stocks that just, they kind of catch your eye because they have these crazy swings. Okay. One of them trading like 30 cents and then boom, they blow up. They hit $3, 10 folds, just like that. Straight wild. Another one jumped $6 to $55. It went all the way up to $90, came back all the way down to 55. Lessons in the game. Be careful with that climb, guys. Be very careful with that kind of climb, for real. Okay, now I got to say this loud and clear for all of you guys out there who are watching this, because I've seen this play out many, many times. I've been trading for over 25 years. Okay, I was a professional institutional trader on Wall Street. When the market has had enough, this is not where you want to be. Okay, this is a game of musical chairs. When the music stops, you're not left with a chair, you're left with no money. Okay, or you see your money cut in half. Bang. Okay, you're left standing. These things, these names, these stocks, they're most of the time, 90% of the time, they always find their way back to square one. They always go back to where they started eventually. Keyword here is eventually. Okay, I don't have a crystal ball. I can't tell you guys when it's going to happen. Is it going to move up from here? It could. A lot of these type of moves in these little no-name, unheard of stocks, they can move from $25 and go all the way to $50 or more. Right? They can double just like that. They can go from 5 to 10 to 15 just like that. But you got to know the eventuality of the game. Okay. I've been studying these markets. I've been trading these markets, bull markets, bear markets, manias, meme stocks, .coms, all of that jazz, guys. I've seen it. Okay. Back in 95, there were literally hundreds, maybe thousands of companies that were riding the hype of the .com era, and they had zero sales. They had no sales. They were pretenders in nice suits. And look, I'm not saying that these companies are not good companies or quantum computing isn't the future. I'm not saying that, okay? All I'm saying is that companies with no numbers to show, they end up right back where they came from. Believe me, I am spitting facts right here. This is market science 101. Okay, you don't have to agree, but trust me, this is not my first dance with these, with speculative stocks like this. Okay, do you know how many cats out here bought MicroStrategy at 320 and they watched it to climb to to 540, and then they saw it come all the way back to 300, and they still didn't sell. Okay. A lot of these guys thought it was going to shoot back up or keep going. And maybe it does. Maybe it doesn't. Okay. That's the thing, fam. Anybody can hit the buy button. Buying is easy. Okay. That's not the hard part. The hard part is selling, knowing when to sell, knowing when to hit that eject button. That's the real hustle, guys. If you don't pay attention, your gains are going to evaporate like an ice cube in the summer. Okay. Right on the beach. Suddenly you're deep in the red. Suddenly you're bleeding cash. You went from up 50% to up 100% to down to 50% to where's my money? Okay. And that doesn't need to be you. Okay. So be very careful again with a lot of these no-name stocks that, just they fire off and next thing you know, they're up tenfold in a day or two. Okay. I'm not telling you guys you have to be the next Jesse Livermore, okay? But you gotta get schooled on how this market game works. It's gonna save your pockets, okay? I promise. All right. Anyways, guys. All right. So that's it. Just be careful, okay? I don't want to see anyone lose their money, okay? So at the end of the day, it is your money, though. You do what you want with it. I'm just trying to help you guys. I'm just trying to give a word of caution on the red flags, on the things that I've seen that have taken so many people. Just trying to give you a word of caution to be careful. All right. But today is another day. There's another battle. So we're going to be ready. Again, just watch out. Continue to watch the stocks that are breaking apart and look at those stocks that are holding that 50-day moving average. Put those names on your list. Start making a list. Okay. Eyes on the prize, guys. Look at the stocks with the strength. Okay. Stay sharp out there. Other than that, thanks for tuning in. Much love. Happy New Year's to all of you watching. Happy New Year's to you and your family. And I will catch you on the flip side. And until then, we'll see you on another market Monday on another market report, which is going to be on Monday. So I'll catch you guys on Monday. Peace and love, guys, and stay sharp.